So we'll start out with the big picture, and like I said, some good numbers, some headlines that are positive. You see comp sales, that blue line, trending up after that disastrous February. There was weather, there was Valentine's Day on a Friday, there were other factors there. Consumer sentiment dropped significantly. People were worried. The prospects of the tariffs and inflation and even unemployment going up, people were starting to get very worried. Economists got worried. But since then, we've seen that the consumer has been relatively resilient when it comes to spending at restaurants as we track it. This is based on our data set. Everybody from quick service through fine dining in the Black Box data network. In this improvement, keep in mind, like, this is real data coming from real restaurants, and what is showing is the behavior of customers. Yes, some are doing better than others, some are capturing the share away from others. There's some players that are doing some incredible things out there right now in terms of sales and traffic, but not everybody is in that same boat. But as I said, it's really consumer behavior. The consumer is telling us we're willing and able to continue to go to chain restaurants. Traffic is negative, but declining at a slower rate than it was a year ago. We're seeing some good momentum there as well. The June number for comp sales is the best we've had in the last 18 months. If you exclude some months based on weather or holiday shifts that were outliers, the June number for traffic was the best we've had in 2 years, excluding those same months. So in general, things have been moving in the right direction, and there's a little bit of positive headlines because of that. When you start peeling behind that headline, you start seeing, well, not everyone's on the same boat. Really, the growth has been driven by casual dining. Casual dining having some really outstanding results from a comp sales and traffic perspective. You probably have heard some of the big players in that space in their earnings calls showing how much that their sales and traffic is growing, showing some outstanding numbers there, really helping push the industry forward, capturing share from others. But again, it's showing that the guest is willing and able to go and spend money with them. Beyond that, fast casual number two on a traffic perspective, fast casual has been doing much better than most segments over the last 2 years. Quick service flipped and kind of shifted down a little bit. Tough comparisons are really kind of what we're seeing there. Upscale, casual, fine dining, softer results. Family dining has been an interesting story. Seeing much better results than they did a year ago. Before, they used to be bottom performers. Now we're part of it is the lapping over those numbers, but in general, they're doing much better than they did a year ago from a year-over-year perspective. If you go back and look at it, step back and look at it on a 2-year basis, you see that casual dining continues to be number one, but it's really because of that year-over-year growth. They were the second worst in Q2 of 2024 from a comp sales and traffic perspective. Now they're lapping over those numbers, and they're posting some incredibly high numbers the last year, and that's what's pushing them forward. But beyond that, on a 2-year basis, we continue to see that fast casual and quick service continue to do better than most. We continue to think the limited service is in a position of strength given what we're seeing in the economy. We do think the trade downs continue from people. We think people want to go and need to go to restaurants. In a lot of cases, they're having to make decisions based on affordability, and quick service and fast casual is the obvious choice in a lot of those cases.